Thank you, Merrill. Good evening, everyone. By way of a little background to introduce Rick, I first encountered Rick at a presentation that he did for the Sierra Club in the Bay Area, and I was impressed with his message and the content, and that's how we came to invite Rick to present for us tonight. But I would like to say that in the past couple of days, the International Monetary Fund produced or released a fantastic report about fossil fuel so-called production gap, in which they say that the leading fossil fuel producers, supported by leading banks around the world, are currently planning to produce enough fossil fuels, coal, oil, and natural gas, to more than twice pass the 1.5 degrees Celsius goal from the UN IPCC report and the like. And behind that, or in addition to that, 2 days ago, the Rainforest Action Network released a report called Complicit, in which they identify specifically Bank of America as funding hundreds of billions of dollars of fossil fuel projects in 2023, and that will lead to exceeding our 1.5 degree goals. Perhaps you'll also remember that since 2015 Paris Agreement, the world's top 60 banks have funded more than $5.5 trillion of fossil fuel projects that will probably, at least they would hope, I'm sure, to produce fossil fuels over the next several decades. And I was stunned recently, about 2 or 3 weeks ago, to find a report that said the top banks are funding not more, at least $6.2 trillion of projects that will cut down forests and replace forests with producing agriculture, soybeans, and cattle for beef and the like. In other words, our banks are really, really bad actors, and that leads us to Rick and this incredibly important topic of what are we going to do about the banks and their greed and the like, which of course is the heart of tonight's topic. Rick is based in San Francisco and is a freelance writer. He has spent decades teaching economics and world history at several schools, and since retirement is trying to get CalSTRS, among others, to stop funding and investing in fossil fuel investments. And Rick is also a supporter of safe streets for cyclists and pedestrians, and campaigns for social and environmental justice by volunteering and participating in events like edifying us tonight. So, Rick, your topic is so timely and so important. Over to you.
Oh, well, that's a great introduction, Joe. And I must say, I'm thoroughly impressed with what you all have been able to do. What a remarkable record of your work, and having it documented like that is so important. I'm a little overwhelmed. Hopefully I will meet up with the expectations that you have. So I prepared a little slideshow, and I'll put that on, and then as we can have questions at the end. And let me just get that started. Okay, is that working well? Well, hopefully.
We're not seeing your shared slides yet, Rick.
Okay, just one moment then. How about?
Yep, they're on now.
Oh, all right, there we go. So as Joe said, I'm I'm the communication director for this California Public Banking Alliance and the San Francisco. I work with the San Francisco Public Bank Coalition and the leadership group there. I got started on this about 6 years ago after I retired from teaching, and seeing as I was teaching economics, this seemed like a really good fit. I must say I got kind of awakened to the situation with finance when I was teaching my students about the the economic crisis, the bank collapse that happened, and trying to explain how banks played a role in that. And I realized that I got a kind of an education in banks and how what a critical role they play. And as a consequence of that, I decided to get involved in working for a public bank. And I'm glad I went into that. Hold on, I'm just trying to locate my notes anyways. So that's how I got started in all of this. I believe that public banks are essential for financing the transition to a sustainable economy. As Joe pointed out, the major banks are continuing to expand and in the production of fossil fuels. He had actually more current figures than I have, as I think you said over $5 trillion. And this is since the Paris Agreement, which was meant to really hold back on investments in fossil fuels. The other thing about banks is they fail to lend to small businesses, which really are the most environmentally or the least destructive environmentally businesses, the ones that operate and they support our community. And these large banks also finance luxury housing, often at the expense of affordable housing or any kind of innovative alternative such as social housing. I believe we really need to look into financing a lot of housing, but we need to do housing much differently than we've done it in the past. And we need to think about how we can do that and look to models in other countries and in places in the United States that are dealing well with solving homelessness and actually providing the housing that's needed. This is a chart that comes from this Banking on Climate Chaos report, and you can see that the 4 of the largest investors in fossil fuels are American banks: JP Morgan Chase, Citibank, Wells Fargo, Bank of America, all names that you're familiar with. And it really has not, the amount of investment is not decreasing, and if anything, it's increasing. And in addition to that, there's very little investment. And there's beginning to be some investment in renewables, but it's not nearly the scale that we need to be at. Now, there's a possibility for another way of having banks work. And I have to point out that this is common within a number of other countries. Having public banks in Germany, every neighborhood has a local public bank. And much of their transitioning to renewables has been financed through their public banks. Here in the United States, we're not so enlightened. And that's what we're working. The CPBA is working to really expand the access to public banking. And the reasons are obvious. If your community is determining the investments rather than someone in New York or some other financial center. If we're making those decisions locally, of course we're going to invest in the green economy. Of course we're going to invest in affordable housing. Of course we're going to support our local businesses. And that's what the whole idea of public bank is. And what is a public bank? So public banks are lending and depository institutions that are owned by a government entity, a city, a county, a municipality, and they have a nonprofit public purpose. They're governed by bankers. We need to have financial professionals, but we also want to have community representatives be part of the government. And we want it to be independent of politicians, because we don't want politicians to hire and fire and create havoc in the bank based on their whims. We want it to be a bank that is responsibly run. Public banks receive deposits from institutions, largely from other governmental institutions such as school districts, the city and county. And they use their lending power to benefit the residents with affordable housing, small business loans, improvement of public infrastructure, and other community needs. Their purpose is serving the needs of the communities, not serving the needs of shareholders, and often those shareholders who are very distant from where the funds are created. We want the taxes that we pay to our governments to go into improving our institutions and into improving our neighborhoods. This is a chart, and you don't really need to see the whole thing. What I wanted you to just notice is that a public bank does much more than any other kind of financial institution can do. So, and the most important thing is it's owned by the government itself. And that creates a certain level of accountability and transparency in how it operates. And it means that any profits that the bank creates get returned to the community. So in the United States, there is a Bank of North Dakota, which is a publicly owned bank that is basically the treasurer of the state of North Dakota. And it actually helps fund government with the money it makes from loans that it lends out. And that's the idea behind a public bank. Here in California, a number of grassroots organizers went to Sacramento on a number of occasions to talk with legislators and get the AB 857, the Public Banking Act, passed in 2019. And here I want to point out a couple people. Does my pointer work? Yeah. This is Trinity Tran. Trinity Tran is the lead organizer of the CPBA. She really coordinated the legislative work that we did. And I want to point out one other person. This is Susan Harmon, who made millions of phone calls to legislators to help get this passed. And the two legislators, this is Miguel Santiago and David Chu, were the two legislators who sponsored the legislation. Interestingly enough, David is now the city attorney for San Francisco, and Miguel is running, I believe it's for city council in Southern California. He's from Los Angeles, and David Chu was a representative from San Francisco. So when that was passed, after about a year of really very strong citizen advocacy, the Public Banking Act was passed. And it was signed by Governor Newsom. And boy, I can't tell you how much work went into making that happen. And what it does is it authorizes municipalities to establish public banks that will be chartered by the California Department of Financial Protection and Innovation. That's the state agency that manages state banks. California is the first state in the nation to legalize public banks. To legalize municipal public banks. As I said, North Dakota has a state public bank. So just like we have public libraries, just like we have public parks, just like we have public pools, public hospitals, public transit, public schools, we should also have public banks. Public banks we need banks that are seen as public utilities, something that the public can use, and particularly for those people who don't have access to financial services at a bank. And it's a significant population in California. Public banks can make a huge difference. Across California, there are, we have 10 chapters in CPBA, and there are 4 that are furthest on, I think, in setting up public banks. Now, we've been working on this for a few years now. In San Francisco, we passed the Reinvest in San Francisco ordinance, and that produced plans for a public bank, and it was passed by our Board of Supervisors this September. Now we're working on securing funding, which is no small task, believe me, and finalizing a governance structure, which again is a challenge. The Public Bank East Bay, they have completed a viability study. They've interviewed people that will constitute their board of directors. They've hired a CEO that's going to be managing their bank, and they've secured a great deal of funding. So they're operating much more independently of government in setting up the bank. They have a group, Friends of the Public Bank, which has done a lot of fundraising to get things going. Public Bank LA worked with the Jane family and the Berggruen Institute to produce a very comprehensive report on what public banking could do for LA. It's well worth looking at that. It's a good model, and I think actually we in San Francisco are going to make use of that model and try and reproduce it in our region. And we're proceeding to hire a banking consultant, or sorry, PBLA is proceeding to hire a banking consultant, and they helped to launch the Fix LA Coalition. In Sacramento, they're a group that is most recently formed, and they came out of a climate emergency coalition in Sacramento. And in a very short time, they've secured financing for a viability study. They've gained support of their treasurer, their mayor, and their board of supervisors. And I must say, what impressed me about Sacramento is they really went and learned from all of the lessons from San Francisco, from the East Bay, from LA, from all of the people who've been working the longest in setting up public banks. And they really tried to get a head start. And I think they really have moved quite quickly. The CPBA over the last year, has produced a video, and I'm just going to take a minute to show to you, which will give you an idea of the kinds of things that a public bank can do and give you a more full idea of what the public bank is. Let me get that started. Hopefully everything works smoothly.
There's no better way to create a thriving economic future for your community than with a public bank. A financially secure means of funding projects in your community that puts people over profits. Public banks can economically finance much needed infrastructure, such as local downtown revitalization, transit systems, and affordable housing, all without raising taxes or floating expensive bonds that double costs and enrich Wall Street. Public banks return banking revenue to our communities instead of sending profits away to shareholders. The democratic nature of public banks lets us define our community's futures on our terms to meet our needs because the bank is a public utility, not a profit-making machine. Banks are in the business of making loans. With public banks, residents decide what gets funded. Lending policies such as providing funds to improve our schools or financing luxury housing, ship American jobs overseas, or increase fossil fuel production. Public bank loans will advance climate justice by reducing the cost of energy-efficient, affordable housing and public transportation, and helping local small businesses thrive. By partnering with community banks and credit unions, public banks enable them to compete with Wall Street megabanks. While public banks make local economies more sustainable, they also are financial first responders when disasters strike. No sooner than we begin to recover from the pandemic, global supply chains are severed and inflation hits. Fires and floods threaten our towns and cities. When disasters like these strike, public bank workers are the first to finance reconstruction because they are public servants rebuilding communities they live in. We need banks that are responsibly run to benefit our communities in good and bad times. We need banks that profit their communities, not private shareholders. Contact your city, county, and regional officials about public banking. Join a chapter of the California Public Banking Alliance near you. We're here to help you get started. You can public bank on that.
Now, just a little background. This video was produced by 90% of the work was done by volunteers. And we produced the whole thing for, I think it was about $3,000, which is really quite remarkable for something like this. And it really was a group project that a number of us worked on, and from the beginning till the end. And it's available to be distributed far and wide. You can get it if you go to the California Public Banking Alliance website, californiapublicbanking.org. It's right there, and you can send it to whoever you want, and probably can figure out a way to make a copy of it if you want to share it further. Oh, next one. Sorry.
There's no better way to create a thriving economic future for your community than with a public.
And we're looking to expand. I'm now talking to folks in San Diego. In the past, there was an active chapter, and we're really hoping to reestablish that. And hopefully some of you tonight who are watching this presentation and are interested in learning more and seeing what it would take, encourage you to put your name and your email in the chat and try and pull a group together. And I must say that there is an enormous bank of resources available through the CPBA. If you go to our website, there's all kinds of resources and handouts that you can use and things that are really helpful for talking to your local politicians about public bank and spreading the word to the public. In the South Bay area, I gave a presentation a couple months ago to the Loma Prieta chapter of the Sierra Club, and there are folks there who are interested in setting up a public bank, and hopefully they will get started and get moving a little further. And we would really love to or love to get something started in the Central Valley. We met with people in Modesto, shown an interest, and we would, I think it would be great if we could get something going in the Central Valley. As I may have mentioned, virtually all of the work that's done by this CPBA is volunteers. I volunteer my time. I don't get paid for it. There's no compensation. And that's pretty much most of us. Some of us are people like me who are retired, and some of us are people who work with other jobs and other organizations and make the time to work with CPBA. We're attempting to get funding from some foundations. We have not received any yet, but that's something we're moving towards so that we could hopefully hire someone to coordinate the expansion of the CPBA. In San Francisco, we did get a foundation grant and used it to hire a half-time staff person, and it's made a huge difference in the work we've been able to achieve. Most public banks have objectives very similar to what the San Francisco Public Bank does. So our number one is affordable, energy efficient housing. And we follow the 3 Ps: to protect, to keep tenants in their homes and homeowners in their homes by making loans available at reasonable rates, and really working to protect those who are already in homes. And then to preserve the housing stock. It's generally much cheaper to preserve the housing stock or convert hotels into housing, things like that, rather than just starting from scratch. But one of the things that we'd like to do is really work to preserve the housing stock and update it. And lastly, to produce permanently affordable, energy efficient housing for families, especially those who are renters. And what a bank can do, or a public bank can do, is we can provide maybe not the entire loan, but we can make money available in a way that's quicker and facilitates building projects getting started. We're also very much interested in climate justice investments, things like expanding the solar power, particularly on public buildings, helping people update their homes with better insulation, with double glazed windows, and energy efficient appliances, and also improving infrastructure, getting infrastructure in San Francisco that meets the requirements of a changing climate, of a rapidly warming climate. And lastly, small business support, particularly ones owned by women and people of color. Those are the priorities that we've set for our bank. And that's, I think that's pretty similar among most of the proposals that are out there in California. The public banks strive for a triple bottom line. So we do need to produce a profit. We're nonprofit, but we have to produce, we have to make loans that will produce. We can't just loan out money to people who aren't going to pay it back. We have to make sure that the bank is financially stable. We also want to make sure that the people who work for the bank and the people who are served by the bank are really taken care of. And lastly, our investments must be sustainable and beneficial to the environment. So those are the three principles that we would operate on. And that would be in the bank's mission statement. And that would be part of the principles that the bank operates under so that we can hold it accountable to those things. Public banks are nonprofit. They whatever profit they create, they return to the local government. But they're not built to make profit. They're not built to send money to shareholders. The only shareholder will be the municipal owner. They can be patient investors with lower returns for longer periods of time. Too often the Wall Street banks, they just want to get the money as quick as they can, and they don't really care what they invest in as long as it's a big return. Public banks are not going to operate like that. They're going to be much more like banks used to be like, where they don't take make risky investments. They make investments that will pay off over time. And in the idea of having that long-term investments is very important, particularly for infrastructure improvements and things like that, and building carbon neutral housing complexes, really thinking about the bigger picture, not just going out and throwing money away on frivolous projects. As I mentioned before, you will not be depositing your money in a public bank. So it's not like a credit union where you can just walk down and put your money in. It will be institutions that will be investing or depositing in this public bank. The public banks, according to the legislation for California, public banks must work together with local financial institutions, credit unions, community banks, community development financial institutions. They will be doing the bulk of the lending in collaboration with the public bank. So the public bank will be a source of a lot of the funds, but the local financial institutions will be the ones who will be vetting the investments based on principles that are set up from the public bank. There, as I mentioned earlier, we do not have a functioning public bank yet, despite the fact that the legislation was passed in 2019. And there is a time we're supposed to get these things up and running within the next 7 years. There have been some obstacles that have made it extremely difficult. And the biggest obstacle is part of the legislation requires FDIC approval of your municipal bank. Now, I'm sure you know the FDIC, the Federal Deposit Insurance Corporation. This is a quasi-public institution that is supported by banks, and it's to insure the deposits. So when there's a run on the bank, like there was at Silicon Valley and at First Republic, the FDIC comes in and restores all that money. Now, they're only supposed to restore up to $250,000, but I'm sure you know in those two instances, they restored everybody's money. So everyone got their money, and the FDIC provided that. They look at banks, and they have to authorize banks to get that insurance, to get that FDIC approval. And that's a very onerous requirement, particularly because there are no other public banks that have gone through the FDIC approval process. So they're not inclined to think about public banks at all. They're all basically, Wall Street bank controlled largely by Wall Street bankers. And they don't have a real friendliness towards the idea of a public bank. That's one obstacle that we're dealing with. We're meeting with them, and we're, getting things going as best as we can. But that has been a huge challenge. The second big challenge is just getting the money to start that bank. It's difficult to explain to people that you're going to take a chunk of money and put it into a bank rather than using it to fund, directly funding housing or directly funding, some kind of program in the parks or something. People have to see that this is an investment that will build in the future and build in the present and the future, but it's something that's going to take some time to really get up to speed. And that involves a fairly significant initial investment to get it going. I thought this is exactly, I don't have a kindly attitude towards the FDIC, so this kind of represented, this is what we have to get through. And in many ways, asking for getting FDIC approval, it makes sense for your local banks and it makes sense for the big banks. It doesn't make that much sense for a public bank because the only depositors in a public bank are the institutions, and they're not going to be withdrawing their money to cause a run on the bank. But nevertheless, we have to satisfy the FDIC, at least at this point, in order to get our banks going. So that's kind of the nutshell of public banks. It's going over, and I'm sure you've got many questions, and I'll be glad to take those. I did want to just reemphasize that you can get more information by going to the California Public Banking Alliance.org. And in there, you'll see links to all of the different locals. So you'll see a link to LA, to San Francisco, and you'll get information. There's information both overall about public banking and then also about the individual chapters that are working on setting up public banks. I think you might also be interested in this report, Funding the San Francisco Climate Action, that it's CLE, the Center for Law and Environmental something, out of UC Berkeley. They did an assessment and they figured it cost about $22 billion to finance the San Francisco Climate Action Plan. So I think that's well worth looking into. And lastly, I wrote an article a while back called Public Banking for Climate Justice, and it was published in a magazine called Dollars and Cents. But if you just do a Google Public Banking for Climate Justice by Rick Erling, you'll find it. And I think that might be helpful to some of you.
Wow. Wonderful overview, Rick. Are you prepared for questions now?
I am.
Wonderful. I just would like to start with thanking you for this introduction. And the idea of our cities and counties and so forth putting money to work for our local communities instead of putting it in B of A and Chase and so forth, where they in turn will invest in fossil fuels, et cetera, makes so much sense to me, at least conceptually. I wonder,
Yes.
You mentioned early on in your presentation that that North Dakota has a state public bank.
Yes.
Could you have information about how that's worked in North Dakota, what kinds of experience they've had, what returns they might have had, and what they've done with their money?
Sure. So it was started over 100 years ago, and it was part of the populist movement. It was really a movement by socialists and social democrats who were tired of the banks in New York controlling North Dakota, and particularly the farmers were having a really hard time. So they put together this bank and started it way back then, and it has survived until today. What's I find fascinating is today North Dakota is a solid Republican state. there's not a single Democrat elected in the state of North Dakota. Yet they still have this public bank. And I think it's important to note that this public bank is not, it's not the kind of public bank I would want. I think the people in North Dakota are very happy with it, but it has financed some shale oil. It has financed some things that I wouldn't want a public bank to finance, but you know that they decide it. But it also has financed affordable housing, and it has done some projects on carbon recapture, which again, it's not, again, wouldn't be my preference, but it is one possibility of dealing with the climate crisis. And it has been financially very successful. It gets returns on par with the top banks and sometimes exceeding the banks. I don't have the return, the numbers on that, but if you can go to the Bank of North Dakota, and they have very good information. We had two bankers who, now these are private bankers who work with the Bank of North Dakota. And they spoke to our reinvestment working group and were incredibly laudatory of the Bank of North Dakota. So these are people who have banks in a number of communities throughout North Dakota, and they work cooperatively with the Bank of North Dakota and find it to be an incredible institution. Does that answer most of what you wanted?
Yeah, thank you. I mean, get the bottom line is this is a successful model.
Yes,
right?
I think it's a successful model. It's, in terms of its governance, it's governed by the state treasurer. There's three elected officials. I don't remember the exact ones, but it's not you would not say it's a particularly democratic structure for the governance of it. So, you know, that might be something you'd want to change in terms of the model, but I think there's much from the model that can be gained. And it became very popular, especially for people with kids in college, because they were giving loans for college at rates well below what the government, the federal government was giving. And, you know, so they've done a number of things that are quite popular within the state.
That's really neat. Thank you. Janice? You're on mute.
I unmuted, thanks. I'm going to go in order of which the questions came into the chat. And the first one came from George, and he was asking about Denmark and if Denmark used public banks to finance the housing that they've been able to build.
I wish I could answer that. I can't answer that. I know Switzerland does. I know Germany does, but I don't know about Denmark. But virtually every European country has some form of public banking. And not just, I mean, China has all of their banks or the vast majority of their banks are public banks and have played a very remarkable role in their economic growth, but I don't know the specifics of Denmark. I'm sorry.
The general knowledge that it's happening, it's financing good projects in countries all around the world is important.
Yes, yeah, and much of the transition to renewables is being financed by public banks. There's one in Scandinavia, a group, I think it's 3 or 4 of the Scandinavian countries have come together and formed an investment bank that is a public bank, and the same kind of thing. And here in California, we're looking into the possibility. California has an iBank, an investment bank. It's not a true bank, it's really a revolving fund. And it has played a role in some environmental investments in technology. And we're looking into the possibility of turning that into a true public bank. But that's a huge project, and that's probably, we're not even sure if we're going to pursue it. We pursued it a while back and came up against roadblocks. But we may go back and look at that again, because a state of California with such a huge economy has the potential of having a really vibrant iBank that could finance a lot of the conversion that we need to do.
And if California were able to make this work, then that could lead to other states, other places being able to make this work.
Absolutely.
We influence others, yeah.
Well, there are other states that are working on it. New Jersey, there's about 3 or 4 other states that are. New York is looking into a state public bank. There are other states that are looking to, but hopefully we will be first. But we have to get going.
Okay, so sorry, I interrupted.
No.
Alice has several questions here. I'll start with her first one. She thanks you, first of all, for the presentation. And she wants to know if of the ones currently working toward establishment in East Bay, San Francisco, Sacramento, or elsewhere, which one's the furthest along and which one will be ready first to start lending for shovel-ready developments?
Boy, that really depends on who you talk to. Personally, I think the East Bay is furthest along. I think that from what I know in talking with folks who work with them, they seem to be furthest along. Now, as I mentioned earlier, they have a more difficult governance situation, because it's like 4 cities and I think it's all just Alameda County, but it's the county and these 4 cities, and it's a joint powers agreement among them. So the governance and the kind of the politics of getting it started are a bit complicated. But they've raised a lot of money. They have people who've been working on this for a decade, and they've really put a lot of energy into it. Here in San Francisco, we're moving along. I mean, we have legislation that authorizes it. We're finding, I think that there's certain politicians who don't really want to go out on a limb, don't want to take the risk, and they are extending the timeline a great deal, and that has been our real challenge. So we have a great champion on our board of supervisors, Dean Preston. He has been incredibly supportive of us, and has really worked jointly with our coalition. So, our board of supervisors has been pretty supportive. We're not really sure where the mayor stands, and our treasurer has not been helpful. So there's certain people who have made it difficult. As I said, well, LA has a similar, they're a little further behind, and they have a very complicated governance structure as well, because they're a county, and then LA is huge, it's massive, and coordinating all of that. And I think they've like 20 or 25 members of the board of supervisors. It's quite complicated, but they have some of the most amazing organizers. So Trinity Tran, who is the lead organizer for CPBA, works in the LA, and she has there's a group of people who really know their stuff there, and they had the help with this institutes that did the research that was really good. But I think they're a little bit further behind. And if I were to pick the long shot, I would pick Sacramento. I think they may surprise us all and be the first one set up. We don't know.
Rick, when you talk about a lot of money, how much What's sort of a minimum to get this process going? And it also sounded like if we wanted to do this in San Diego County, it sounds like we have to get several cities and maybe the city of San Diego and the county to agree, because the other cities aren't large enough in terms of resources. Am I saying that right? I'm just trying to understand what we need to do here.
I think you are. Now, Trinity would be a good person to answer that because they have the same situation. Or one of the folks from the East Bay, Susan Harmon, would be a good person to talk with about that. But you're right. It does make it a little more difficult. In terms of the money, it could be as little as $5 million. Estimates, I think that's probably about the minimum you're talking about. To get a really vibrant bank going, you're talking about starting with something more like 50 million. And in the scale is what makes it able to do a lot more. And that's why, it's not, I'm just going to say this, though I'm an advocate of public banks, but it's not going to be an immediate solution to anything, because it's going to take some time to get these up and running and to get them to scale. That's the big challenge. Those are big challenges. San Francisco, it's worth taking a look at our business plan that was just presented. If you go to LAFCO, the Local Agency Formation Commission, if you just put the initials LAFCO, San Francisco, and look for the San Francisco reinvestment, there's a lot of information, and you can download the reports that our consultant, HR&A Associates, put together. They have both a business plan for what's called an MFC, Municipal Financial Corporation, which is kind of an interim bank. It's a revolving loan fund. And what a revolving loan fund means is just you loan out the money, and as payments come back, you loan out the money that's come back. So when a bank loans money, they don't wait for the money to come back to make another loan. They loan more money than they have. So banks actually create money. That's a hidden secret that people don't know, but banks create money. Every time a bank makes a loan, I was taught in school, they take the money from all the depositors and then they loan it all out. That's not really true. They take the money from all the depositors and then they loan out 5 or 6 times as much money as they actually bring in. And then they sustain themselves on those payments coming back in as people pay off those loans. So that's the real power of banking. And that's what we're trying to, break that monopoly that Wall Street has on that very powerful, set of instruments that they can use.
Thank you. Janice?
Let's see, back to Alice. She would like you to explain how CDFI would work with a public bank with a real project example.
Okay. Well, CDFIs finance local projects. So maybe a CDFI, someone comes to a CDFI and says they'd like to build an apartment complex for low-income people. And they'd say, well, how much money do you need? We need $20 million. Well, the CDFI might not have $20 million that they can loan out, but they could check out all, they could go through and see if this is a logical investment, if it will be sustainable, if it will, pay for itself, if these people know what they're doing, and they will do all the legwork of setting up that loan. And then they would go to the public bank and get 80%, 70% of the loans from that bank. And so the public bank would work in collaboration with, it's called a participation loan. And this is very common. Private banks do this all the time. They don't all come up with all the money. They often cooperate with each other. Banks that they're competing with, they cooperate with to make loans if they don't have enough funds. And they don't, generally a bank doesn't want to commit a huge amount of money to one loan. So that's how they would work together. Now I have to give a qualification. I have never worked in a bank. I've taken a couple of college courses at my community college on banking. So I'm trying to learn as much as I can about it. But, and I think this is certainly a limitation of what we can do, because none of us are bankers. And we rely on the information from bankers, which makes it very difficult. We need to have some progressive bankers. Boy, if you know anyone who's in the banking industry and has good politics, touch base with them, because we need people like that, because it's so easy to be tricked by bankers, because they just say, oh no, you could never understand this stuff. This is too complicated. And, and of course, when they screw up royally, like they did with SVB, like they did with First Federal, no one says to them, what the fuck, excuse me, what are you doing? Why are you doing this? And they keep their jobs, or they get golden parachutes. So we really do need to have people learn financing and learn more about banking and recruit some of those people. And we're meeting up with some of those people who might be helpful. Sorry.
There's several questions about the FDIC.
Sure.
I'll kind of put them together. One is about whether or not North Dakota Public Bank is insured by the FDIC. Another one is, how long do you estimate before FDIC will approve public banks in California? And then why does the FDIC not approve public banks?
Okay.
Is it because they compete with commercial banks, because they worry about the public banks will lose money, or something else?
Okay, let me start with the first one. The Bank of North Dakota is not insured by the FDIC. It's self-insured. So the state of North Dakota guarantees the money that's in their bank. And that's not unusual for governments to do that. For instance, in San Francisco, our municipal, the Muni, the transportation agency, they're self-insured. They don't have an insurer that insures them. So when they get sued, I'll give you a personal story. I was run over by a bus, by a Muni bus. And I sued the city of San Francisco. And the city of San Francisco has a fund that they've set aside for when people sue them. So they're self-insured. And that's the same thing with the Bank of North Dakota. They're self-insured. So they never had to get FDIC approval. As to why the FDIC approval will be difficult to get, the FDIC is made up of bankers who work in Wall Street banks primarily, who are or who come out of the banking industry, and so they don't. First of all, they're not amenable to public banks. They don't understand what a public bank is, and frankly, they don't really want to do the work to find out and to get to move up on that. It will be we have we have some connections that are supportive of what we're doing, and we're meeting with them, and we're trying to figure out how to maneuver through this. And we've had a number of meetings with both the East Bay and San Francisco have met with the FDIC and have presented ideas about our bank to them. And they've not said, forget it, but they've just made it very clear that we're going to have to really go through lots of hoops to get to where we want to get to. Now, what we're hoping to do in San Francisco is to set up what's called a municipal financial corporation as a green bank. We're trying to start a green bank. So it would be called a green bank. And firstly, I'm sure you've heard the term green bank. They're not really banks. They're really revolving loan funds. So what we're trying to do is to set up a green bank, which will be a revolving loan fund, so the risk will be much less, and to show that we can responsibly manage that and make good investment decisions, and use that as a way to say to the FDIC, look, we've shown that we can do it, and now we want you to give us more authority to operate as a true bank.
George would like to know how public banks are better than U.S. HUD.
Oh, I don't know that they are better or worse. Do you, maybe, could you explain to me what U.S. HUD does? I think, are you, George there?
I think George might have logged off.
Okay.
So, yeah, he further on down, he said he needed to sign off. So we can maybe do some research on that.
Yeah. A quick answer to that would just be that as we're structured in California, we're municipal, so it's much more local. HUD is a federal institution. And as far as I know, federal money for like housing has been very minimal. Ever since Ronald Reagan, they've really cut federal funding for housing. And that's one of the reasons why we need public banks.
Great, thank you. I'm just thinking about HUD too, and not coming up with an answer to his question either, but I'm going to look it up after.
Okay.
Allison is asking if a municipality could lend money for a project without actually forming a bank. And a second part of her question is, what's the benefit of giving money to the bank to loan out?
Yes. Okay. So a municipality can, and they do loan money all the time, but they loan money as revolving loan funds. So they loan a certain amount of money, and then it gets paid back. And as it gets paid out, they can loan more money. That's quite common among municipalities. What's different about a bank? Well, let me say that's exactly what we're trying to set up with the green bank. That's what it would be. And as far as, the more money you have, the more substantial projects you can fund. So, it's, and part of banking is being able to diversify. You can't put all your loans in one big project. You have to spread them out, because if something goes bad and doesn't perform, then if you have all your money in one or two big projects, then your business goes out of business. So the more money you have, the more you can spread it out, and the more effect you can have. So and as all things, it's like the difference between your mom and pop store and Safeway. Safeway has massive amounts of money that they can, operate on economies of scale. They can have computer systems that run all of their stores. If you're just one little thing, you can't do that. And so That's one of the things we're thinking with the CPBA is really becoming kind of an organization that can take advantage of economies of scale amongst the municipal banks. And then the other part to that is that our bank, having municipal banks means you have local control. So one of the reasons we set it up as municipal banks is because people were very adamant that this be controlled locally so that the funds get used for things that people support in their community.
Joe, did you have any questions, or should I keep going through the chat?
I just have one or two more that I'm kind of stunned, Rick, that we know so little about public banking. I mean, even though this law has been around for 4 years, there's little awareness, right? And of the phenomenon and what we're doing or trying to do. And I was just wondering, in that context, does it make is the law that currently exists adequate for the purpose, or would you suggest that we should go back to Sacramento for some changes, adjustments, some variation on the law, or some amendment that would make it easier, or are we just fine?
That suggestion has been made. I can't tell you how much work went into getting AB 857 passed. And I think some people say, oh yeah, just go back and have them take the FDIC off. The only way we got it through was agreeing to have FDIC approval. And I must say there were people who said, that's going to be the death of this. We're not going to get FDIC approval. And we made a judgment that the only way we could get it through was to accept that and to work with that. Now, it may be that we have to come back and revise it, but that will be an enormous amount of work. And particularly now, I mean, the legislature has changed, the assembly has changed every 2 years, they have elections, so it won't be the same people we're coming back to. And as I mentioned, the R2 sponsors are now doing different things. So it would be I'm not saying we wouldn't do it, but I'm just saying that it's difficult to just go back.
Difficult to do.
And get things changed like that.
Yeah, thanks. Well, my final question is, let's assume for the moment that we wanted to have a public bank in San Diego County available to the municipalities in the county, in the county government. What do we need to do? What would you recommend? How do we make this happen? It sounds to me like it's good for the climate, although obviously from what you're saying, it's a struggle. It will be a struggle. It'll take time and effort. But
if I were you guys, what I would do is I would call and talk to the two. There's a couple in Sacramento who've been really instrumental in getting the Sacramento project going. Trying to remember their names right now. I'll send you their contacts.
Okay, thanks.
But they, and like I said, they came about this from a climate point of view. That was their whole thing, is that they wanted to have something that would help finance the transition to clean energy. And they started with absolutely nothing. And they were able to, take a little bit from each of us and work with that. And they went to their treasurer, and their treasurer was really gung-ho. So their treasurer has been one of the strongest supporters of it. And it's kind of interesting. He's kind of towards the end of his career, and he's like, this might be something really interesting. I could actually have made a difference. So he was like came on board. And I believe after that, the mayor, and then they had some people in their board of supervisors that they went to. But, you know, over time, they pulled together a rather, you know, lively group of people who are supportive. And they did it. I mean, I sat on the phone for, you know, a couple hours talking with them. Susan talked with them. They really just reached out to people who've been doing all the work over the last few years and said, what can we learn from you? And I think that's how they've moved as quickly as they've moved. And,
Great,
you know,
thank you.
not
Thanks.
to take away from anything they've done. They're an incredible group of people. But, you know, that's how I would start.
Great advice. Thank you. Janice?
Allison in the chat asked if you've heard of any public banks anywhere that use money from individuals.
Oh yeah, Germany's, the Sparkassen in Germany is, like I said, that's where most people bank in Germany. Is you go to your local bank, which is a Spark. If you've ever traveled to Germany, just look. Every community has a bunch of Sparkassens. They're public banks, so that's quite common. I'm sure there's other European country. Well, there's other countries. Well, we have a colleague who works, our staff person, Misha, is in India right now. And India, he says all of the banks in India are run by the government. They're all government banks, so they're all public banks. You know, so it's not uncommon. And there you deposit your money in a public bank. You can
maybe we need to go on a field trip to Germany to check out the public system there.
You can have an account with the Bank of North Dakota. The thing is, they just have 2 branches. So they have one in the capital and then one in another large city in North Dakota. But you can actually set up an account there. But they don't, you know, they don't have check cashing and all, or, you know, they don't have checking services and all the stuff that your local bank has.
Mm-hmm. And it's not convenient if there are only two places.
Exactly.
Let's see. Gary asked about why bother getting FDIC approval. I think you've already touched on that. It's because it's required in the law, and you'd have to go back and get the law amended to be able to do it without FDIC approval.
That's correct.
And he's just making the case that a city with good reserves should be able to move forward if they are able to fund local projects. Yeah,
no, we've been stymied. San Francisco has $14.5 billion in its investment fund. Virtually all of that is invested in government securities. You could take a small portion of that and put it into a public bank and actually provide things much more locally. I mean, government securities basically fund the military. That's primarily what they're funding, the military and the deficit. And that's where our city is invested. And that's what got me and many of us, the people who started the SF Public Bank Coalition, they started it because they came back from Standing Rock and you know, saw that Wells Fargo was doing all the business with San Francisco, and they invested in the Dakota Access Pipeline. So San Francisco stopped working with Wells Fargo, but we work with all these other banks that do just as much harmful things. I find it interesting. I'm not going to make anyone embarrassed or what, but most of the people I know bank with Wells Fargo, Citibank. They do all, and we all know how horrible these companies are. And there is an option. I mean, I bank with credit unions, and I've never had any problem with working with credit unions. So they're, but it's funny that even after these banks get exposed for all the horrible things that they do, people stick with them. And I guess, a lot of people feel it's just too difficult to change banks, but and I think that's our treasurer is the same way. He's always dealt with the Wall Street banks. That's who he knows. That's how he deals. And he doesn't really want to learn how to do something new. So we have to push and make that happen. And that's what we've been doing.
We're creatures of habit, and we become comfortable with the status quo, and it's hard to change or move beyond that, or see what's possible that might be better.
Absolutely. And it's, I'm sure. Yeah, I think that's one of the challenges we face with climate. We're used to doing things the way that we've done it, and it's very hard to change sometimes, but got to figure out new ways of doing things.
The last comment in the chat is from Elizabeth. She's one of our board members, and she mentions that we had a visitor to one of our meetings who has her own business called, I think you put it there, Our Sphere. And she works with 401ks and helping people move away from 401ks that are invested in fossil fuels, if I understand it right. So that's just a FYI for you. If you don't know Alex Wright, you might look her up and look up oursphere.org. She has a lot of information to share on her website.
I definitely will. Can someone tell me, I know there's a way of downloading the stuff that's in the chats, isn't there?
Yeah, we can send it to you, Rick.
Yeah, I'd appreciate that.
In an email with a link to the recording.
Okay. And the chat will be in that?
Yeah.
Okay, great.
We'll include that.
That would be wonderful.
I think I got to all the questions. Hopefully I didn't miss any. There are also comments of thanks, and the presentation was very interesting. It's inspiring, so much to think about. And regardless of what happens here in San Diego County, I'm rooting for San Francisco.
Oh, thank you. Well, I hope you pull together a group there, and I'm sure there's stuff that you can build on from the past, but and there is actually, if you go to the CPBA website, there is a thing for San Diego. There's a link that you can actually
So the main organizer, you said earlier on, moved away, but there might still be people who were involved in that effort who are in the county.
There are at least 2 or 3 who are, and there's one fellow, I'll send you the name. There's one fellow who comes to our meetings regularly, Ian, who lives in San Diego.
That would be great if you could connect us, Rick.
Okay, I'll do that.
So Janice and Joe, if you don't have anything else to add, I think I'll take over. And like I said, I get to have the last words here. And certainly, Rick, I want to thank you so much. And also, of course, I want to thank everybody who came to this meeting today. I just wanted to let you know that our nonprofit, Banks with Beneficial State Bank, have you heard of them? Yes.
Oh, yeah.
So we're happy to be associated with them, since they will not invest in any fossil fuels or anything like that.
Absolutely, yes.
And Rick, we have a tradition here at the North County Climate Change Alliance. If we'd like to thank our guest speakers. And so what we have done is we're going to purchase a tree in your honor that will be planted here in an area in California that has been burned by the wildfires.
Oh, that's very nice. Thank you.
Yes. So again, thank you. And thank you to everybody who has come tonight. And we hope to see you all again in January, because we have a whole year of exciting new speakers coming up. So thank you, everybody, and take care.
Well, thank
Bye-bye.
you.
Thank you, Rick. Appreciate it, and appreciate everybody attending tonight.
Take care. Bye-bye.